Hello, and welcome to the Konvergent Video Series for the week of May 25th. Hope you all had a wonderful Memorial Day weekend, and with all the stuff going on with the coronavirus, it might be difficult to really focus on what the purpose of that holiday is. And so I want to take a quick second and just really appreciate all of those that have died in the service for our country. So with that, let's get into the numbers for the week. The market was up about 3% for the week last week, which just a little bit more than offset the loss we had over the previous week. And we had a mix of good news and bad news throughout the week. We had news around potential vaccines. We had news about economies opening back up. Well, we also had releases of news around the economic data not being so good. So another roller coaster of the week, as we had some big up days and big down days throughout the week of that. So with that, I wanted to show a chart. I think that is something I've been showing on previous videos and something that I'm going to be keeping a close eye on through all of this market volatility is this big divergence we've seen in the S&P 500 performance over the last month and a half or so and corporate earnings expectations for companies in the S&P 500. Typically, they track pretty closely. The earnings of those companies pretty well impact how the performance of the market works. However, what we've seen lately is the market have this huge performance to the upside as it's recovered, while corporate earnings have seen this massive drop in expectations. And at some point, something has to give. Either we need to see a big increase in corporate earnings expectations, and it doesn't necessarily have to be expectations in the next few months, but we have to get some confidence that by 2021, 2022, these companies are going to completely replace the lost earnings and see a big growth in earnings by that point, or we're going to have to see the market come back down to get closer in line with those earnings expectations. So something we're going to keep a close eye on and continue to talk about in upcoming videos. So with that, we'll switch to the economic data for the week. There wasn't a ton of data released last week, so we're going to focus on unemployment as we have been in previous videos. So last week we had 2.4 million of new initial unemployment claims, but that really doesn't tell the full story because when you look deep into the labor numbers from the U.S. Department of Labor, we also had 2.2 million claims for pandemic assistance. And those are people who didn't qualify for state aid. So really we had about 4.6 million of new initial unemployment claims last week. Also, we're up to now over 25 million of continuing unemployment claims. And again, those are only the state numbers. Those don't include anybody who's on a continuing pandemic assistance claim. So it's probably dramatically underreporting the amount of people that are on some sort of unemployment claim at this time. So, those numbers are pretty concerning, which leads into some concerns of other economic data that we're starting to see. And that one of them is that right now, about 9% of all mortgages in the country are in a forbearance program related to the coronavirus, meaning they're getting some form of relief on their mortgage right now. And currently in May, only 21% of those in the forbearance program have made any sort of payment on their mortgage up to this point. So that leads us to some concerns about what's to come in the future. If 10% or so of mortgages ultimately default, how is that going to impact all of those people who are ultimately going to have to move out of their homes? Or how is that going to impact the banks or investors that are owning or holding those mortgages at this time? So that leads us to still a lot of concern about what's to come. We're obviously encouraged by the market performance. We're encouraged that the economy is opening back up again. But what does that really mean when the economy opens back up again? How quickly are we going to recover and get back to pre-virus levels? And what if we only get back to something like 90%? And that's, some of the numbers I've heard thrown about is, if we can just get back to 90%. And that's maybe some of the reason that the optimism is there on the market is that there's a belief that we can quickly get back to something around that level. But what does that really mean? In my experience, most small business and medium-sized businesses in the country operate at about a 10% profit margin. And so if we only got back to 90% of where we were pre-virus, that means about 10% of their top line revenue is gone, which means really that entire profit margin is gone. And how many small and medium-sized businesses can really operate in that environment? How many more expenses can they cut? Do they need to make additional cuts to staff? And so my sense is, in talking to some of the business owners I know, is that many of them will choose just not to reopen or are going to have a really hard time in that environment. So that really is why we're still pretty concerned about where things are going. We're optimistic, we're hopeful, but we're still cautious in how we're approaching the market going forward. So one last item for today is related to the Paycheck Protection Program. So the SBA has recently released some additional guidance this last week, really related to the forgiveness of those loans. And I get questions all of the time from business owners, making sure they're not making critical mistakes or missing out on opportunities related to the SBA programs and just their business in general. So if you have any questions that you want to dive into related to your business and get a free diagnostic, please reach out. We'd be happy to set up some time and talk with you through that. So with that, I hope you all have a great week, and we look forward to talking with you soon.